We got Ryan Day from Solstice. How we
Hello.
doing?
Great to be here.
What's going on?
Welcome to the show.
Thank you.
We
Thank you.
just created a money cannon, and it's
I'm actually gonna update to the
Okay.
banner for them.
You
we
guys, it got in my
have
eye. Oh my gosh. Oh,
we have we have the ability. I love that. We have the ability to add specific tokens to it, like stablecoins.
Oh, do you have
Solstice has a
USX
stablecoin.
Yeah. Do you have USX
I don't
preloaded
know.
and ready to go?
Let's see. Let
We're
me
gonna
see.
see. Oh my gosh, we do.
Okay.
I did not know this, but we do. Look at this.
Woo,
It's
now we're
raining.
gonna. All right, there we go. That's what I need. Thank you.
Make it
That was on
rain.
the fly too. I appreciate
Make it
that.
rain. Okay.
Wow.
I don't know,
So
Trey.
welcome
God, you
on.
set it up well. I am pleased to be here now. I was
Yeah.
middle of the road,
This
but
is a
now,
great
now I'm ready.
podcast, man.
Yeah.
I'm sorry, live show.
Yeah.
I slipped up there.
Yeah.
Well, hello.
Man.
Ryan, give us your quick intro. We'll dive into Solstice. We have more actually before we do this. I do have
Yeah.
something else queued up because we had a great chat with your co-founder Ben. We'll roll this tape and then we'll get into it.
Yeah. Ben Nadereski is the founder of Solstice, and he's bringing Wall Street's favorite trading strategy to Solana and killing fake yield in the process.
A lot of these strategies that are out there in the market right now, you'll see these very high APYs and you'll see these very untransparent just numbers just published on websites as if it doesn't matter. And that is the wrong side of development that we're seeing in DeFi right now. USX, our native stablecoin, saw no volatility, no depeg, and no issue going through the largest crypto liquidation event in history. The most exciting evolution in financial markets is not happening on Wall Street. It's happening on Solana.
Catch the full strategy on democratization of hedge fund profits and the rise of institutional DeFi with Drew Rogers and Ben Nadereski.
Happening on Solana. There we go. Okay, so Ryan, we've kept you at bay long enough. Give us your intro and intro to Solstice.
Yes, I'm glorified tweet boy over here at Solstice, but some other people.
Well, you've done a great job.
Thank you. But CMO over at Solstice. Solstice is the yield layer for Solana. We're just focused on tokenizing off-chain yield strategies, bringing them on-chain, and making them as DeFi-composable as possible. So we currently work with partners like Camino and Exponent and Loopscale to kind of really drive up as much DeFi utilization as possible. But we're sourcing usually uncorrelated or off-chain yield sources. So it's not we're trying to bring capital from outside the ecosystem. In the ecosystem, it's all making money together, which was, we used to say WAGMI and stuff like that back in the day, but that's kind of the idea. Not stealing from other people's pockets.
Is this
Hopefully that's a
banner
good intro.
accurate? I'm reading this banner that we have, Solstice, Solana's biggest stablecoin. Is that something that we can claim in this banner?
It is the largest native stablecoin to Solana. So we do have some that are above us, like USDC and USDT. Shout out to some of the greats, of course. But we are the largest native stablecoin on Solana.
Okay.
Yeah.
Hold on. Well, here we go.
Yep, live update coming in.
I'm
reading right now. I know the basis for this was bullish. Huge news, them coming on, allocating capital. I'm seeing in this article from Business Insider that aiUSX though has run for 3 years with positives across every quarter since launch. A record regulated allocators can audit directly. I think especially with talking with Jason from Blockworks about the Transparency Alliance, that's just a huge. I don't really know if there's many other builders in the space that can go attest and say, hey, go audit it. Don't trust me.
Yeah.
Don't trust our data. So one, I would ask, what has that journey been like, over these past 3 years leading up to be, for one, to be able to say that. But two, what has your experience been like, even just, running it from a marketing perspective?
Yeah, well, if you chat with Deanna, tell him I say hi. But then the other side is so the history, right, of Solstice. It started actually as just a trading house. So we were running the basis trade now for I guess it's 3+ years at the moment. And so it got to the point where kind of Athena was coming to market, another a great protocol, another great project, and we thought they were doing amazing stuff, but kind of like Solana wasn't getting access to a lot of the things that was happening around there, right? So how do we bring this type of Athena stuff to the Solana ecosystem? And we thought that would be a great juncture for us to kind of launch into. And so what we had, which I think a lot of other DeFi protocols or a lot of their yield sources don't have as they're going kind of into this, into launch or into tokenizing assets, is we had the history of actually running this trade desk for 3 years, and then we tokenized it and brought it on chain for permissionless access starting in September 30th. So we had this trading strategy that we've been running for three years. Then we tokenized it and brought it on chain. So what was nice is, especially as we're coming to market, we were able to launch with 160 million in TVL. And this is fresh new TVL into the strategy because we're showing allocators a lot of things like, hey, like we're able to go take the NAV from our strategy for 3 years and show them this is the return profiles that we've had in our trading strategy. And they're like, oh, interesting. Like not only am I an institutional investor, right, who understands things like NAV and IRR and all of that kind of stuff, you're a lot of the times, a lot of DeFi protocols come out and be like, we back tested this strategy for 3 months and now we've been running it live with 25K, right? No, like up until then we had 200 million in AUM. So we were actually running this trade profitably live for 3 years beforehand. So that made like jumping at the gate early. They brought me in roughly about May last year. So when we were starting the product of tokenizing this and bringing this on chain to kind of bring this to market in the kind of permissionless ecosystem. And now we're sitting at where we are today, which is this really interesting juncture where we have a product with a regulated fund where we can take institutional capital from that's never touched blockchain rails before. They can invest fiat. We bring that on chain for them and go get the DeFi yields because everyone's very excited about what's happening in the DeFi ecosystem. But then we can also have permissionless people coming in from wherever they are in the world, investing in the allocation or into the protocol. Both of those parties are getting the same underlying strategy and getting access to the yield at the end of the day. So it's just a really nice dynamic that we get because, again, a lot of DeFi protocols that are coming out, they either don't have a fund, they're trying to be purely on chain, all that kind of stuff. So we really like what people see a lot in the ecosystem is what our protocol is and what's on chain. But there's so much stuff that happens back of house off chain that we've spent a lot of time building that I don't think a lot of other people have.
Wow. That's a fun place to be when you feel like you've built a lot of things that aren't visible or noticed yet. It's kind of this like exciting eagerness for the world to know it. And it does seem like that. I mean, that's kind of where my mind was going next. Like I'm on the site, you have like yield strategies and platform. There are a lot of different things here that are like being showcased as like different core parts. Help us understand the differences between some of these things like USX, SLX, Soulstream, and maybe like specifically where those things are going as you want to reveal more of what may not be seen yet.
Okay.
Well,
Zach,
I'd even say on the product stack in the, you know, I think you did the X, you did an X article update on some TBL. So you mentioned USX, EUSX, sorry, mouthfuls, STRCUSX.
We're going to work on them. GPT 5.76, you know, all that kind of stuff. Work on it. Yeah.
So we'll work on that. Because you have a few forward-looking stablecoins as well with aiUSX, TBUSX as forward-looking primitives. So help us understand how these all blend into an ecosystem. And then I guess the second part of this, once we get through the stablecoin-oriented products, is where does the token, where does SLX fit into this conversation?
Yeah. So very, very high level. We'll start high level and work our way down. Basically, what we're positioning, right, ourselves as the yield layer. And so I think the idea is, and you'll see this in a bunch of different models. Like I think Athena is a good example, right? They're taking a bunch of yield and tokenizing into their one USD token, right, and bringing that yield to the market. And what we're thinking is, I think our thought process is that users will probably want to mix and match their own yield strategies. As long as what we are doing is always sourcing or working with partners that are sourcing the on-chain or off-chain yield themselves, like happy to come in and tokenize that and bring it through the distribution channels that we have in Solana ecosystem. But the fundamental core is when you are grabbing one of the Solstice tokens, you are getting the source of the yield that is generated from wherever the different sources are. So we have USX, that's our stablecoin, right? So that's how you get into the ecosystem settlement layer. That's how we you lock into the different positions. EUSX is kind of the marquee one that we started with. It's the basis trade kind of delta neutral strategy. So if you're, as much as I love to give out financial advice on these things, it's the lowest risk of these strategies as we're looking into. But then now that we've kind of proven this foundation, you know, we've been alive, or you know, we've been launched now as a token project since September 30th. So I don't know the math on that, but 7-8 months now. So now we have this really solid foundation. We have $500 million in TVL. Now it's okay. Now let's stage 2. How do we scale up the different yields that are available? How do we bring more of these to market? And how do we do that quickly and effectively, given all the different yield sources that are going to do in there? or kind of come onto market. But the one thing that we're trying to do differently is find the, like everyone can get a yield source from wherever, but we want to work really hard on how to make that DeFi or that yield source as DeFi composable as possible, as fast as possible. So for example, like one of the big things that's coming up for us is StretchUSX. And so we're going to be launching StretchUSX on Solana here in just a few weeks.
Is that what this is on the kind of soon teaser here?
Coming soon, maybe.
Soon.
Little alpha
All
for you
right.
guys. Yes, so we'll be launching StretchUSX. It's our tokenized version of the Stretch. Shout out to Mike Saylor of the Stretch product. We're going to be launching kind of junior and senior tranches. We'll be launching that very, very soon. And so that's the first of these series of tokens that will be coming out in quick succession after the fact. Now that the foundation is there, now it's, okay, take a new yield source, plug it into the ecosystem, let people start earning and tokenizing it and take it around to all of our DeFi partners. You know, we will be doing some very big things with that very soon. You know, we're thinking about how does Stretch, which is, well, yes, it's a great product that has 11.5% yields right now. How do we use that in a DeFi ecosystem so people can go lend, borrow, loop, ET, YT, all of that kind of stuff in the best way possible, and trying to limit downside risks like liquidations and all that. So
can you go a little bit deeper into, so where's the yield coming from Stretch's example?
Yeah, so basically we're just going to go out and buy a bunch of Stretch from the money that comes into the ecosystem, and we'll take and generate the yield on those dividend dates.
Stretch is a separate token. Strategy.com/stretch from Strategy. Okay, this is
Yes.
slightly new to me, so this is good.
Oh, that's all right. All right, this is slightly new to you guys. But let's
start from square one. Let's go Stretch. What's it fit in? How does it power the
all right.
USX?
So this wonderful man by the name of Michael Saylor. All right. Shout out to one of the greats. He has convinced people that, and rightfully so, all of us here, that I will buy Bitcoin today. And I think Bitcoin years from now will be 30% more valuable than it is today. And I will strip the vol out of that for you and give you 11.5% on a monthly basis now if you buy Stretch. So Stretch is fantastic. I think it's a fantastically structured financial product with financial engineering here to put this together. It's not a stock. You're getting a return on capital investment. It's mind-boggling how amazing this is. So what we're doing with StretchUSX is Stretch right now lives in like your TD Ameritrades or whatever. How do we bring that on chain so people can start leveraging that yield and use it within DeFi? So, and we're doing it slightly different because one of the drawbacks about having just Stretch kind of in the market, just having like you can get Stretch on Solana right now. There's a StockX version of Stretch. Great product. Love the team there and everything that they're doing. The issue is Stretch is a somewhat volatile asset. It's not as volatile as potentially some of the other ones out there, but right now, right, the price is 98.75 cents. Right, once it hits $100, that's what they call the ATM printing area. Anytime it goes above $100, Michael Saylor prints a bunch of new Stretch and goes and uses all the money from the printing to go buy a bunch more Bitcoin. And so that's how he keeps accumulating more Bitcoin, because, I mean, who's a better salesman for Bitcoin than Michael Saylor? He's convinced a lot of people to give billions of dollars to go buy Bitcoin. It's an amazing like, again, worth digging into because this is an amazing product. That's after the dividend date, right? After the ex-dividend date, sometimes the money or the value of the shares can come down. And so that can become a problem, especially as you're looping or using this as collateral, and then it suddenly makes you in a either unprofitable position, or if you want to exit, you might have actually lost the yield because you come out at a position lower than your buying price at 100. So we're trying at StretchUSX to strip out that volatility even. So Stretch is stripping up the volatility of Bitcoin, StretchUSX is stripping out the volatility of Stretch, and then trying to make that really DeFi composable, but underlying you get that yield that is being generated off the future return of Bitcoin being worth 30% more in 5, 10, 15 years.
So then
I'll stop there unless there's questions.
Yeah, no, I was going to say, so if I'm understanding correctly, now you've gone from great. So you have USX. I think I saw like there's USDG as collateral. There's there's other stablecoins as collateral there. aiUSX is, call it the yield bearing version of that in YieldVault across Camino, Orca, Radium, and then so now we have these other ones, which is using USX to essentially go buy Stretch, and you could apply that to. You could apply it to, I think there's a hyperliquid DAT. You could do that with PER. You could do that with essentially insert dividend assets off chain and yield sources. Okay. Yeah. So then forward looking, where does the aiUSX and
so I'm sure. So again, like there's a lot of great yield products that are available on EVM, and not as many are available within the Solana DeFi ecosystem. And so what we're looking at is where are these great opportunities out there. And I'll give like a little bit, because we, my people who run the PR are going to be very angry at me for saying too much too soon. But we have, so we're backed by DSX Capital. It's $1 billion investment fund, but they have a bunch of portfolio companies too. The portfolio companies actually work in the AI infrastructure space, doing build, lending, and compute rentals and stuff like that. And so we're using the partnerships there to spin up AI infrastructure lending yield. So similar to USD AI or CHIP. Yes. And I turned my phone off. So this is, I swear I'm not staring at the ceiling. Okay, my camera's back on maybe. So this is the types of yield that we're looking into. And so we're looking out there at other yield. Again, we're trying to uncorrelate the yield sources that we're getting by bringing off-chain yield sources on-chain to the crypto ecosystem, just because when you think about some of the stuff that's gone wrong with some of the looping or yield sources or contagion risks, or, Resolve is still figuring their stuff out, that kind of stuff. What we're trying to do is minimize the risks that comes from the downstream for users. And so if they're taking our yield and then going upstream and doing looping and stuff, that risk is a choice that they're making, not the fact that they chose to use our protocol, our ecosystem ourselves. So we're trying to limit as much of the risk downstream from them as possible, because we're sourcing that yield ourselves. And so that's kind of one of the strategies that we think about as we're kind of scaling.
Drew, I'll give you a second. Yeah, no, I have the next question queued up, but if you, Drew, want to give you a second, if you have anything.
I guess my my natural mind goes to just what could go wrong. Like, what are some of these things that seem risk? Like, there's always a risk here in any of these things. Like, what are some of those trigger points or things that seem like key things that you're looking to avoid, or key risk mitigations that make something like this successful? I mean, I know the team is extremely experienced, and the people behind you and are adopting this seem extremely trustworthy, but like, where does risk fit into this conversation, and how are you thinking about that?
I mean, we all know Mythos is in the wild already out there, breaking into every sort of protocol and thing that exists. So one of the, I think that's always like an overhanging existential threat that we're always thinking about. But again, there's a lot of like OPSEC that we can do. So when the big drift happened, one of the things that a lot of folks did is they looked across all these different protocols. My camera, I'm the worst. All these different protocols, that what their kind of multi-sig look like, what their time locks look like, all of this kind of stuff. And luckily, because we've been thinking about kind of the OPSEC of this for a while, we typically rated, I think it was 9 out of 10 a lot of the times in the security. We have 24-hour time locks already built in. We had a larger multi-sig. We had a lot of different things set in place. A lot of it is the OPSEC side of things, right? So we're thinking about that. As long as we can protect that kind of downstream as much as possible and do best possible practices. We're working with the Solana Stride program to make sure that we're taking a lot of those best practices and sharing best practices across the industry, because then upstream, right, if something happens to one of the partners that we're integrated with, not that the underlying yield or the collateral will ever be in trouble, right, but our users are still affected. Even if someone's taking something from USX or something and going and using that on Exponent or Camino, and something happens there, right, it's still going to affect our users, and that's never a good thing. So those are things we're often thinking about. But we're very choosy about the partners that we're working with, and then we're working very closely with them on what does the risk look like here, and what's the appetite, and making sure sometimes we make people a little less happy because the APY percentages aren't as high, but it's really in the best interest. You got to sometimes take your medicine and be the adult in the room, as opposed to it's the degenerate that's trying to ramp up that APY all the way to like 110%.
Oh man,
back to like Wonderland time days where it was like 100,000.
Oh my
if you guys are old enough to remember that.
No, that was literally my entry into DeFi.
Yeah, dude. What a wake up call. It's all about the dreams we made along the way.
I skipped Ethereum and went straight to like Avalanche, chain, Ponzi schemes. I know, I'm just the good old.
You really cut your teeth. That's right. Yeah.
Really I know. My wife was like, tell me more about this. And I was like, what are you talking about?
You touched on this a little bit, but what do you think about, I know it's pretty recent news, but have you had a chance to see what Blockworks has been up to with the token transparency stuff? Any thoughts on some of that?
Tell Dan Smith I will get back to him on the DMs, because I'm supposed to be chatting with him sometime soon. But we did just TGE this week, so I've been a little busy, Dan, if you're listening to this. I apologize in advance.
Man, give a man a break, okay? Come on.
I know. Geez, would you lay off? Right? You're texting me more than my wife. Come on, buddy. But no, it looks amazing, right? And so that's one of the things that we're thinking about is now that again we've launched our token, we have the foundation set, and we're scaling up. It's like what are more things that put us in front of the right audiences of investors, both retail and institutional side. Luckily, we had a really good starting point from our time running this strategy and having that kind of connections before we tokenize. But now that we're tokenized and now that we're trying to step outside of our network, how do we do that? And I think the token transparency stuff that you guys are doing is top notch. And so I will be following up very soon to kind of dig in and see what we can do to take part as well.
Yeah, talk to us now. TGE, I imagine I've never been through launching a token like that. So I can only imagine what the past 6 months have been like. But the question that people always ask me is like, hey, Zach, you focus on stablecoins.
Yep.
What tokens do I go buy? And obviously I don't give financial advice, but also it always begs the question of, if you're a stablecoin product, why a token?
Yeah, it's a good question. So the thing that we are is, while yes, we are a stablecoin project, we really focus more on the yield side. And so the stablecoin is primarily because of a choice that we had to make, diversifying away from just having yield-bearing stablecoin, right? We have to have a yield-bearing token versus a stablecoin to still offer the same things and find our way through, as they like to say, the Clarity Act is getting passed at some point, find this way through this unclear kind of murky gray area and position ourselves so that when regulation does down at the pike there, and we can act and be protected as we're thinking about those kinds of things. So the SLX part comes in more on the yield side than it is on the stablecoin side, in the sense that a token gives us a secondary revenue source to a yield source. So if you think about most hedge funds or things like that out there, their primary revenue source is getting money from you, going out and running the trade, taking either a management fee or performance fee or both, right? And then giving you back a portion of the yield that you earn. But it comes with, because they need to make sure that the bills are paid, it comes with some stipulations, right? Like either you can exit once a year or you can exit once a quarter. You have to have minimum thresholds. You have to do all of this stuff. And so as we're moving into this day of instant gratification across everything, even people around financial products with Robinhood and SoFi and all this kind of stuff, people are expecting this kind of user experience that they can get through Amazon Prime same day delivery. And so how do we do that with financial products? If we diversify the yield sources or the revenue sources that we have, it gives us the ability to give users that experience without having to potentially cannibalize the revenue that we have that we're generating as a business. One of the examples where SLX is the first kind of utility that comes out of it is if you stake SLX or STSLX, it's basically a hedge on your aiUSX. It's basically you can have a hedge on the basis trade. So its APY currently is 20%. If aiUSX's APY goes up, the APY of SLX, staked SLX, will drop, and it kind of matches. So it gives you a way to hedge yourself as a user, step one. But the next step is instant unlocks. So right now, Athena, I think they actually just updated it. They can go down to a day in some instances, but up to 7 days. We have a 7-day unlock period. I think a lot of these yield sources as well. Primarily, it's because they want to make sure, one, there's cash available and those types of things, but it's also the revenue, right? As you're projecting revenue to deliver in the yield that you're supposed to deliver to your users at the end of those 7 days, there's some analogs there. But if we have this token in the market, it gives us the secondary revenue source to kind of, okay, you guys have staked your SLX with us, you're holding SLX, that's great. We can give you access at different times and levels because we know we're getting revenue from you in other sources and other means. And so it's really this way to help balance kind of the ecosystem on giving people a better user experience through our ecosystem, because we know we can, again, kind of catch that revenue in different ways. So that's kind of like the main thing. And so more of these user experience increases will come as SLX is more ubiquitously used across all these. Hopefully that's helpful. Yeah.
Yeah.
Ryan, what is
warrants its own deep dive.
Hey,
I think Ryan, one, this whole the conversation around yield is something that we're going to be having more and more of. And one, would love to have you back to dive into this and especially break down some of this visually, but also help us think through this in terms of other approaches. I'd imagine that you're very connected to a handful of other builders and people, especially in the Solana ecosystem, who are taking different approaches with this yield conversation. So that's a priority for us in the coming months, is to really unpack that sort of that dynamic and how you can generate yield in a ton of different ways and how important that is. It's always been a huge part of the world of finance is earnings. So exposing the different paths and approaches to that is a key priority for us in the business. So would love to have you back to dive into this again.
Happy to get my quant on here to dig into it at some point too. But they're not as exciting and fun and boisterous as I am on the stream. So just keep that in mind. All right.
Cool.
But yeah, happy to do that.
Training.
That'd be great. Yeah.
What would you leave? What would you leave the leave the stablecoin focused, yield focused listeners with? It sounds like it's been a big week.
If you are interested in the largest, any sort of yield, if you're interested in yield, give Solstice a look. SLX is out there in the wild now. Saying it's a pretty cool token. But we also have some cool yield products, and pay attention kind of mid-June. Stretch, which we've all learned about here today a little bit, will be available on Solana and deeply integrated into DeFi. So for all those loop-or enjoyers, get ready. Some fun APYs will be coming to the market very soon.
There you go. One more cannon as we say goodbye.
Boom!
Thanks for the time today.
Thanks, guys. It was great.